ABC Limited has invited applications for 1 lakh shares of rupees 10 each at a discount of rupees 1 per share. So now students, it is a case of issue of shares at discount. Payable as 4 per share on application and 5 per share on allotment. There is no call, right? We can check that amount as 10 rupee was the total face value minus 1 rupee discount. That means issue price is rupees 9, right? The shareholder or the applicant is required to pay rupees 4 on application and 5 on allotment. That means total 9 rupee would be recovered from him by the time of allotment itself. So there is no possibility of first call. Applications were received for 90,000 shares. Now students, here lies the second point. In this case, the shares offered were 1 lakh and we have received applications only for 90,000 shares. That means it is a case of under subscription. All the money was received except the allotment on 1,000 shares. Right students? So in case of under subscription, we must check for minimum subscription also. Minimum subscription is 90% of the shares offered. So 90% of 1 lakh is 90,000 which the company is receiving. Right? So let us proceed with the journal entries now. So the first entry would be bank account debited to share application account. This entry signifies receipt of application money by the company. And in this case, the application money was rupees 4, which was received for 90,000 shares. So 4 multiplied by 90,000 makes it a total amount of 3,60,000 being application money received for 90,000 shares. Now students, the next entry would be transferring this application money that we have received into share allotment account, share capital account. Share application account debited to share capital account. Remember, in this case, there are no excess applications that we have received. So no money is to be refunded. Rather, in this case, we have received applications for less number of shares than we had actually offered to the public. So the total amount that we have received, that is 3,60,000, would be transferred to share capital. So the amount is 3,60,000 being application money transferred to share capital. The next entry is for allotment. Now remember, it was a case of issue of shares at discount. So discount is always allowed at the time of allotment. So entry for discount would also be factored in. So the journal entry would now be share allotment account debited, discount on issue of shares account, to share capital. Students, remember, discount is a capital loss for us, and like any loss, it needs to be debited. So share allotment account debited, discount on issue of shares account also debited, and the total amount should be transferred to share capital. Now in this case, we were supposed to receive rupees 5 on allotment, and this amount would be received on 90,000 shares. So 90,000 multiplied by 5 is 4,50,000 that we have to receive on account of allotment. Discount was of rupees 1 per share, right? So 1 per share multiplied by 90,000 is 90,000 rupees. The total of this is 5,40,000, which would be transferred or due or actually be transferred to share capital account. The narration would be being share allotment due. And the last entry would be that this amount of 4,50,000 would be received except for 1,000 shares who have not paid us, right? So let us see what that journal entry would be. The entry would be bank account debited to share allotment account being allotment received, and the amount to be received was 4,50,000. Out of this, a particular shareholder who was holding 1,000 shares has not paid us rupees 5 at the time of allotment. That means 1,000 into 5, we have not received 5,000. We were supposed to receive 4,50,000. Out of this, we have not received 5,000. That means we have received 4,45,000. Alternatively, we can introduce calls in areas also in the debit side of this entry to show the amount that we have not received.